Hello everyone, welcome to the sixth session of MCQs. Now lastly we ended with question number 54 of MCQ and 61 onwards we have already done. So today first we will solve from question number 55 to 60 and then we'll go from question numbers 41 to 50. So all of you take out your study materials, pen, notebook, keep everything ready. Let us start with question number 54. Now 54 and 55 both the questions are based on this particular P&L appropriation account. So all of you look at this profit and loss appropriation account. Profit and loss appropriation account for the year ended 31st March 2022. You all can see here Puneet's commission is basically given to you as 44,000. Now Raju's commission is something what is missing in the question. Okay, then profit share transferred to, over here again these two amounts are missing in the question, and profit and loss account is also missing in the question. Now what is asked in the question, let us understand it. 55 and 56 are based on this question. So what all is asked over here? 55th question, Raju's commission will be means they have asked you this, Raju's commission amount. Okay, now how to find Raju's commission? First of all, you all can see over here this Puneet's commission is given 44,000, which is given over here as sum amount into 10 upon 100. Okay, so what will that sum amount into 10 upon 100 be? I think the question is missing over here. Initial question is missing. Before debit P&L appropriation account, the main question starts. I'll just see if it is there in the previous one. We'll go through from that. No problem. I'll just give you the basic information over here. Puneet's commission is given 10 upon 100 means it is on the net profit. Okay, it is on the net profit 10 upon 100. And net profit is something we write over here. Net profit is missing in the question. All of you must be having the subject matter before this P&L appropriation account already with you. So in that, Puneet's commission is 10 upon 100 of the net profit. So from this, applying this formula and using Puneet's commission, we can find the amount of net profit. Okay, Puneet's commission would be equal to, as it is given, net profit into, all of you can see here 10 upon 100. Net profit into 10 upon 100. Now what is Puneet's commission already given? 44,000. So 44,000 will be equal to net profit into 10 upon 100. Now if you bring 100 on the other side, 44,000 will get multiplied with 100 and 10 on the other side will get divided. Okay, that would be your net profit. So what would net profit be equal to? 44,000 into 10, 4,40,000. Net profits would be equal to 4,40,000. Okay, this amount would be equal to 4,40,000. Okay, this amount would be equal to 4,40,000. Now Raju's commission is asked. So in the subject matter about this, it is given that Raju's commission is to be given at the rate of 10% on profits after all commissions. This is the information already given in the question. Raju is going to get 10% commission on the profits after all commissions. Now from this 4,40,000, if you subtract this commission of 44,000, okay, minus Puneet's commission, if you subtract 44,000, then what is the amount of profit that will remain after Puneet but before Raju's commission? This is the net profit before Raju's commission but after Puneet's commission. Okay, before Raju's commission, what is the amount of profit that will remain? 4,40,000 minus 44, 3,96,000. Okay, 3,96,000 will be the amount of profit after Puneet's commission, 4,40,000 minus 44, but before Raju's commission. Now because he is given 10% commission on profit after all the commissions, What is the concept you studied, that if you have to calculate commission on net divisible profit or on the profit after charging the commission, how do you count it? If it is 10%, you do 10 upon 110. If the commission is to be given on the profits after the commission, then you do it 10 upon 110. So over here, how will we find Raju's commission? Raju's commission will be equal to this 3,96,000 into 10 upon 110. Into 10 upon 110. Now 1 0 cancel. So 11 into 3, 33. 6. 11 6 are 66. 36,000. What would be the amount of Raju's commission over here? 36,000. Means option C will be your correct answer. Okay. 36,000 means option C will be your correct answer. First answer is obtained. Now what is the second question asked to you? Puneet's share of profit will be how much? Now Puneet's share of profit means, see this, before Raju's commission we already know amount is 3,96,000. Further Raju's commission we give 36,000. So whatever profit remains after giving Raju's commission, that will distribute between the two partners. Means what is the amount of profit will distribute between the two partners? Net distributable profits will be equal to 3,96,000 minus 36,000. That is 3,60,000. And you can again cross check. If Raju is to get commission of 10% after the commission profit is 3,60,000. Does his 36,000 come as 10% of the profits after his commission or not? Yes. So there is a cross verification that he does get 36,000 commission as 10% of the profits after commission. Okay. Now 3 lakh, this 4,40,000 minus 44 minus 36. This amount of profit would be equal to 3,60,000. Okay, this amount of profit would be equal to 3,60,000. Now, is any profit sharing ratio given in the question? Not given. If you all see the question above, the profit sharing ratio is not given. So how will you distribute these profits? Half. Means both the partners will get 1,80,000 each. 3,60,000 is half, 1,80,000. So option A, 1,80,000 will be the correct answer. Okay. Since no profit sharing ratio is given in the question, the profits will be distributed equally between both the partners. So what will Puneet get as his share of profit in 3,60,000? Half of that, 1,80,000. I hope everyone is clear with this. Going further, question number 57. Now have a look at it. Choose the correct sequence of the following. We have to choose the correct sequence of the following. So let us do the markings. What will come first? First, guarantee by firm to the partners, then by partner to the firm, then transfer of profits to P&L appropriation account. This would be done first. Very first, the profits from profit and loss account will go into P&L appropriation account. Thereafter, after transferring the profits to P&L appropriation account, first, if partner has given the guarantee to the firm, if any partner has given guarantee to the firm, that would be taken into consideration. Okay. First, if partner has given that he is going to guarantee minimum earnings of so and so amount to the firm, then that amount partner has to give to the firm. Okay. Then here we have guarantee by partner to another partner and here by firm to the partner. First, firm's guarantee to the partner will be fulfilled, then partner to partner will be fulfilled. So what would be the correct sequence of this? Very first, third one. Here you find third, here you find third. After that, second is the second option itself. Here you find first, here you find second. So third, second, then third sequence is the first point and fourth sequence is the fourth point. So which is the correct option? C. Okay, what will be the correct sequence? First, very first, profits from P&L will be transferred to P&L appropriation account. Then if partner has given guarantee to the firm, he has to pay the amount to the firm, it will come in P&L appropriation credit side. If firm has given any guarantee to the partner, then that will come in P&L appropriation debit side. And lastly, if one partner has given guarantee personally to another partner, Then in the net divisible profits, we have to adjust the share between the partners. We have to minus the amount from the partner's share who is going to give the guarantee, and we have to add the amount in the partner's share who is going to get the guarantee. So this will come last. Okay. C will be the correct sequence. Question number 58. If 10,000 shares of rupees 10 each were forfeited for non-payment of final call money of rupees 3 per share, and only 7,000 shares were reissued at rupees 11 per share as fully paid up, then what is the amount of maximum possible discount that the company can allow at the time of reissue of remaining 3,000 shares? Now, what is the concept of maximum discount that can be allowed on reissue of forfeited shares? The remaining 3,000 or these 7,000 doesn't make any difference. Whenever you reissue any forfeited shares, what is the concept of maximum discount? The maximum discount that can be allowed is the amount forfeited. Okay, once again, the maximum discount that can be allowed is equal to the amount forfeited. And what is the amount forfeited? Amount forfeited is the amount paid by the shareholder towards the face value. Premium is not to be included. Okay, here amount forfeited towards the face value. Here it is given that the shares were forfeited for non-payment of 3 rupees. Okay, out of 10, 3 rupees is not paid. So what is the amount paid? 10 minus 3, 7. Whatever amount is paid, that is amount forfeited, and there is a maximum discount we can give 7 rupees into. They have asked you what is the maximum discount that the company can allow at the time of reissue of remaining 3,000 shares. So at the time of reissue of remaining 3,000 shares, 7 into 3,000, what is the maximum discount the company can allow? 21,000. Option B will be your correct answer. Okay. 59th question. As per Companies Act 2013, securities premium balance can be utilized for which of the following purpose? See, security premium can be utilized for which purpose? You have already studied mainly in the chapters of debentures that security premium can be utilized to write off. It can be utilized to write off discount on issue of debentures, first priority. Then P&L we used to write off. Even loss on issue of debentures or premium on redemption of debentures, both are same. That first we have to utilize security premium, then balance from profit and loss account. So whatever you have studied so far in the chapter of debentures, as per that knowledge also you try to answer, you'll be able to get it. Look at it. Can it be used in issuing bonus shares to existing shareholders to convert partly paid shares into fully paid up? No. Security premium can be used for giving the bonus shares, but not to convert partly paid shares into fully paid. If extra shares are issued fully paid to the existing shareholders as bonus, in that security premium can be used to give the bonus. Here, because this converting partly paid into fully paid up is given, for this it cannot be used. If it was simply given issuing bonus shares to existing shareholders, yes, security premium can be used as giving fully paid bonus shares to the existing shareholders. Providing for premium payable on redemption of debentures, yes, this is so far the correct option. As I discussed right now, first priority we use in discount is also security premium, and even premium on redemption we use Lloyd to POD. So POD is premium on redemption of debentures. The first priority what we use is security premium. Let us still rule off the other options. Can it be utilized to write off the capitalized expenditures? No. Only capital receipts and capital profits can be utilized to write off capital expenditures. Security premium cannot be used. Buyback of debentures? No. Buyback of shares it can be used. Buyback of equity shares it can be used, but not for the buyback of debentures. So option B is the correct answer. It can be used, security premium can be used for providing premium on redemption of debentures. 60th question. Ganga and Jamna are partners sharing profits in the ratio of 2:1, old ratio. They admit Saraswati for 1/5 share in the future profits. On the date of admission, Ganga's capital was 1,02,000, Jamuna's capital was 73,000, and Saraswati brings 25,000 as her share of goodwill, which will be given to old partners. Okay, this will be given to Ganga and Jamna in sacrifice ratio. And she agrees to contribute proportionate capital. She agrees to contribute proportionate capital of the new firm. How much new capital will be brought by Saraswati? How much capital will be brought by this is asked. How much is the proportionate capital which Saraswati has to bring? Her share is 1/5. Okay. Now, how do we find the things? This we have done earlier also in earlier MCQ session, that if 1/5 is Saraswati's share, then Ganga and Jamna's share will be remaining 4/5. Now, what is presently Ganga and Jamna's capital? 73,000, 25,000. Goodwill will also go to their capital, 1,02,000. If 73 plus 1,02,000 plus 25, by 25,000 we will add, though it is for goodwill, because it will be distributed between the old partners in sacrifice ratio. So in the new firm, the old partners capital will increase by the amount of 25,000 once it goes to the old partners. So what will be the capital of this Saraswati and Ganga and Jamna? Ganga and Jamna's capital in the new firm will be how much? It is already 1,02,000 plus 73,000 plus 25,000 goodwill will also go into their accounts. So 1,73,000, 75, 2 lakhs. In the new firm, the capital of Ganga and Jamna will become 2 lakhs. I hope everyone is clear why this 25,000 is added. Because even share of goodwill brought by the new partner will be credited to Ganga and Jamna's capital account in the sacrifice ratio. Once it goes into their account in sacrifice ratio, their capitals will increase. Now in the new firm, their capital is going to be 2 lakh rupees. Now understand this. When Ganga and Jamna get 4/5 in the share, the new partner Saraswati gets 1/5. Okay, if Saraswati gets 1/5, 1 minus 1 by 5, 5 into 1, 5, minus 1 by 5. What will be Ganga and Jamna's share? 4 by 5. When Ganga and Jamna's share is 4 by 5, Saraswati is 1 by 5. When Ganga and Jamna's capital is 2 lakhs, what should be Saraswati's proportionate capital? 2 lakh multiplied by this 1 by 5 and divided by this 4 by 5. Now divide by 4 by 5 means, can I say it will get multiplied by the reciprocal? So it will become 2 lakhs into 1 by 5 into 5 by 4. Divide by 4 by 5 means it will become into 5 by 4. 5 cancel. What is 20 divided by 4? 5. So 50,000. What will be the capital of proportionate capital of Saraswati to be brought? 50,000. Okay. $50,000 option C is the correct answer. I hope everyone is clear with this. Okay. Now going further, question number 41. So the last MCQ session, 55 to 60 were remaining that we have covered. Now all of you turn back the pages and go to MCQs 41. 41 to 50 we try to cover today. After that, if still the time will remain in that 1 hour, we'll go from 31 to 40 in the further session. First, let's try to cover 41 to 50. Look at it. 41st question. Shyam, Gopal and Arjun are partners carrying on garment business. Shyam withdrew 10,000. Shyam has withdrawn 10,000 in the beginning of each quarter. Gopal has withdrawn garments amounting to 15,000 to distribute it to flood victims. Even if you withdraw not the amount in cash, but in kind, like he has withdrawn the garments, it's a garments business, means he is withdrawing goods. It will be considered as a part of your drawings only. Okay, it will be considered as a part of your drawings only. And Arjun has withdrew 20,000 from his capital account. Oh, from his capital account. This is important, from his capital account. Now, whenever any partner withdraws any money from his capital account, then you don't include it in interest on drawings, because interest on capital will decrease. Capital will decrease, so automatically interest on capital payable to the partner will decrease. Interest on drawings is always charged on the amount which is withdrawn from the profits. Here, this 10,000 which he is withdrawing in the beginning of each quarter, it is assumed that it is withdrawn from the profits. Gopal is withdrawing garments of 15,000. Again, it is assumed that that is withdrawal from the profits. But in case of Arjun, it is clearly given that he is withdrawing this amount from his capital account. Whenever you withdraw the money from capital account, no interest will be charged on drawings. No interest will be charged on drawings. Okay. Now going further, what is the main question asked? The interest on drawings charged from Shyam, Gopal and Arjun at the end of the year. Now listen everyone, interest on drawings charged from Shyam, Gopal and Arjun at the end of the year is asked. So one thing is sure, we already know that Arjun's interest is 0. If you eliminate the options, Arjun 2,000 not possible. Arjun has to be nil. So either it is option C or option B. Now this will save time in your exams. Okay. Beginning of each quarter means the calculation is very lengthy. Annual drawings into R upon 100 into average period divided by 12. But this is so simple that Gopal has withdrawn garments of 15,000. Is the date given? Date not given. Now since the date is not given, how do you calculate the interest on drawings if the date is not given? Average 6 months. So this also we can count very speedily. 15,000 multiplied by, what is the rate of interest? 10%. 10 upon 100 multiplied by 6 by 12. 6 into 2, 12, 0, 0, 0, 0 cancel. 2 into 750 is 1500. So we now know that amount of Gopal's interest is how much? 750. Gopal nil is not possible. Concluded. Even if you don't waste time in exams on calculating Shyam's interest, we know that option C is the correct answer. Anyway, here let's prove it. How do you calculate interest for Shyam? Okay. Annual drawings into rate of interest upon 100 into average period divided by 12. In exams, you need not do this calculation. We already got the correct answer. We are just re-verifying and confirming that the answer is correct. Okay. He has withdrawn 10,000 in the beginning of each quarter. So 10,000 into 4. The annual drawings will be 40,000. 4 times he will withdraw 10,000 beginning of each quarter. Rate of interest is 10 upon 100. Now beginning of each quarter, first quarter April, May, June. Beginning 1st April, what you withdraw 12 months will remain. Last quarter January, February, March. 1st January, what you will withdraw 3 months will remain. 15 divided by 2. will be equal to 7.5. What will be the average period? 7.5 divided by 12. 0, 0, 4 into 3, 3 into 2.5. Now 1000 into 2.5, 2500. Cross verify. We already marked option C. Do we get this? 2500 as the answer or not? Yes. But in exams, no need to waste time in doing this. First partner already you know. Third partner Arjun is nil. So only two options will remain. Second partner date is not given. So average 6 months if you count it comes to 750. From there itself we can conclude that option C would be the correct answer. You can save time in exams in this manner. Okay. 42nd question now. On the day of dissolution of the firm, Roop Brothers had partners' capital amounting to 1,50,000. External liabilities 35,000. Cash balance 8,000. P&L account, mind well, debit balance 7,000. Realization expense and loss on realization amounted to 5,000 and 25,000. It means realization expense is 5,000 and loss on realization is 25,000. The amount realized by sale of assets is how much? Now, we have done this type of question earlier also. So first we will make balance sheet to find out how much are the other sundry assets which are to be sold. Now, once you find out that sundry assets to be sold, we already know loss on realization is 25,000. Okay, but that loss on realization 25,000 has 5,000 because of expenses. Means remaining 20,000 would be the loss on sale of assets. Once you get the value of assets from the balance sheet, subtract 20,000 of loss because of assets, you'll get its realized value. Let us first make the balance sheet. Now let us see what all information is given. Capital amounting to 1,50,000 will come on the liabilities side. Okay, capital 1,50,000. Then liabilities amounting to 35,000 will come on the liabilities side. Liabilities, how much? 35 or 1,35,000? 35. Then cash balance 8,000 will come on the asset side. Cash 8,000. Then P&L, since it's a debit balance of 7,000, that will also come on the asset side. Okay, P&L's debit balance always comes on the asset side. Debit on the asset side, credit on the liability side. Okay, 7,000. Now whatever amount remains, everything is covered. Remaining are realization expense and realization loss, that doesn't come in balance sheet. So 1,50,000 plus 35, 1,85,000. Now 1,85,000 minus 15,000 would be 1,70,000. This would be sundry assets. Missing figure, balancing figure. 1,70,000. Okay. Now over here, as I discussed with you already, that out of 25,000 of loss, expenses are 5,000. Means what would be the loss on assets? 20,000. Okay, loss on assets would be 20,000. Out of 25,000 of loss, because of expense 5,000, there is a loss. Means remaining, we assume that liabilities we have paid at book value, there is no loss in payment of liability. So remaining 20,000 of loss would have been contributed by sale of assets. Now here 1,70,000 minus 20,000 of loss on sale of assets means they would have been realized at what value? 1,50,000. Okay, they would have realized what value? 1,50,000. So what is asked to you over here is realized value on sale of assets, that is option D, 1,50,000. So you have to make a rough balance sheet in exams whenever such a question is asked. Okay. Going to question number 43. Navya and Radhe were partners sharing profits and losses in the ratio of 3:1. So that is the old ratio. Further, Shreya was admitted for 1/5 share in the profits. Shreya was unable to bring her share of goodwill premium in cash. The journal entry recorded for goodwill premium is given below. Now, if you all see this journal entry, what is given to you? Okay, now over here, all of you check your study material, you will find that these amounts are missing. In your study material, these amounts are missing. There is a misprinting. You include these amounts, every one of you, okay? Shreya's current account debit 24,000 is not there in your study material. You write it down. To Navya's capital account 8,000, to Radhe's capital account 16,000. Now, what is asked to you in the question? The new profit sharing ratio of Navya, Radhe and Shreya. Now, how do you find the new ratio? Old ratio is already given. From that, if you subtract the sacrifice, you'll get the new ratio. And how do you get the sacrifice? You get the sacrifice from this information. Because goodwill's entry, what do we pass? New partner's current, if the new partner is not able to bring cash. New partner's current account debit with goodwill into his share. Means goodwill into 1/5. But that amount is already given, 24,000, that is of no use. To old partner's capital account, we always credit in sacrifice ratio. Old partner's capital, we always credit in sacrifice ratio. So over here, 8,000 and 16,000. 8,000 into 1, 8,000 into 2. What is the sacrifice ratio? 1:2. What is the sacrifice ratio? 1:2. From this 8,000 and 16,000, the amounts which are credited to old partner's capital account, we identify 8 into 2, 16. What is the sacrifice ratio? 1:2. Now, using this sacrifice ratio, old minus sacrifice, we can find out what is the new profit sharing ratio. Let's do that. First, Navya, Radhe, and who is the third partner admitted? Shreya. Navya, Radhe, and Shreya. The old ratio. What is the old ratio given to you? All of you can see here, 3:1. 3 plus 1, 4. 3/4, 1/4. Shreya is admitted for 1/5 share. Shreya is admitted for 1/5 share. Okay, Shreya is admitted for 1/5 share. Write it here. Shreya is admitted for 1/5 share. Now, what is the sacrifice ratio? 1:2. 1 plus 2, 3. 1/3, 2/3. Means this 1/5. How are Navya and Radhe going to sacrifice? 1/5's 1/3 will be given by Navya and 1/5's 2/3 will be given by Radhe. So what will be the actual sacrifice of Navya and Radhe? 1/5 into 1/3 will be given by Navya. 1/5 what Shreya is going to get into 2/3 will be given by Radhe. 1/15, 2/15 will be the actual sacrifice of both the partners. From old ratio, if you minus the sacrifice, we get the new ratio. Okay, how will we get the new ratio? Old ratio minus sacrifice. What is the old ratio? 3/4 minus sacrifice 1/15. What is the old ratio? 1/4 minus sacrifice 2/15. Okay, 1/15 and 2/15. If we solve it further, 15 into 4 LCM is 60. Okay, 15 into 4 LCM is 60. Now 3 into 15, 45, minus 4 into 1, 4. 45 minus 4, 41 by 60. Same way here, 4 into 15, 60. 1 into 15, 15, minus 4 into 2, 8. 15 minus 8, 7 by 60. Now once you get this 41 and 7, there itself we can conclude that what would be the new ratio. 41 and 7 means 41 is to 7 is to 12, but still let us find it for the new partner. 1 by 5, how will you convert this 1 by 5 into denominator 60 multiplied by 12 by 12? To make the denominator 5 as 60, we'll have to multiply it by 12. So 12 by 60. What is the new ratio? 41 is to 7 is to 12. Okay. But even 41 and 7 obtained, we can there itself conclude that the answer is option A, 41, 7 and 12. So what is the important point here? From the goodwill's journal entry, you identify the sacrifice ratio. And once you get the sacrifice ratio, then the new partners share 1 by 5. You distribute in that sacrifice ratio, you get the actual sacrifice. Subtracting that from old ratio, you get the new ratio. Now question number 44. Theoretical question. Assertion. Commission provided to partner is shown in profit and loss account. No. Where do you show the commission provided to the partner? Profit and loss appropriation account, not P&L account. So assertion is wrong. Let's read the reason. Commission provided to partner is charge against profit. Is it a charge? No, it's an appropriation. It is not a charge, it is an appropriation. So this is also wrong. Okay, it's not a charge, it's an appropriation. Assertion is wrong. Reason is also not a proper reason for assertion. Yes, we do show the things in P&L account which are charged, but commission to partner is an appropriation, so it must come in P&L appropriation account. So both are wrong. A is correct, no. Both A and R are correct, no. Both A and R are incorrect, yes. Option D is your correct answer. Both assertion and reason are wrong. They are incorrect. Okay. Last one, no need to read. 45th question. A share of rupees 10 issued at rupees 4 premium. Face value 10, 4 rupees premium, out of which 7 including premium 1 was called up. Now out of 7, if 1 is premium, then 6 is towards the face value. Okay, 7 minus 1, 6 rupees is towards the face value. That was called up and paid up also. Uncalled capital. That's quite simple to answer. Out of 10 rupees face value, how much is called towards the face value? How much is called towards the face value? 7, no, sorry, 6. Okay, excluding the premium, 6 is called towards the face value. What is uncalled or not called by the company? 4 rupees. Option B, 4 rupees per share is the uncalled capital. I hope everyone is clear with this. Quite simple question. For the 46th question. While issuing dash type of debentures, company does not give any undertaking for repayment of money. Normally, whenever we issue the debentures, we have to give the undertaking, we have to take the responsibility that we will repay the money after 5 years, 6 years, 7 years. And what is Companies Act 2013 law in case of debentures? The maximum redemption period of debentures can be 10 years in India, 10 years. Okay. So we have to normally, whenever we give the debentures in the market, issue the debentures in the public, we have to mention we will be repaying the money after how many years. But in which situation will the company not give any undertaking for repayment of money borrowed by issuing such debentures? When the debentures are non-redeemable. Okay, if the debentures are not to be repaid, which in India is not allowed. Okay, in India such type of debentures cannot be issued. But if you don't have to repay the money, if you don't have to take any undertaking or guarantee of repaying the money after so many years, those debentures are called which debentures? Non-redeemable debentures. Okay, non-convertible means they'll not be converted into equity shares. We have to repay the money, so these are actually redeemable. Secured debentures means where assets are mortgaged or given in security. They are also generally redeemable. Zero coupon rate means no rate of interest would be paid. High discount is given at the time of issue. So non-redeemable, we don't have to give any undertaking to repay the money. 47th question, a big question. Look at it. Samiksha, Arshia and Divya were partners in a firm sharing profits and losses in the ratio of 5:3:2. That is the old ratio. Then, with effect from 1st April 2022, they share future profits and losses in the ratio of 2:5:3. That is the new ratio. Their balance sheet showed debit balance of 50,000 in P&L account and balance of 40,000 in the investment fluctuation fund, and the market value of investment is 30,000 against book value of 50,000, means there is a loss in the value of investments with 20,000. Okay, book value 50, in the market only 30. It has gone down by 20,000. That is the loss on the valuation of investments. Now, partners have decided not to show revised value in the balance sheet and pass an adjusting entry for it. Now, how do you pass the adjusting entry? If the favorable balance is there, favorable means reserves, accumulated profits are more, then gaining partner capital account debit to sacrificing. If there is unfavorable balance, then sacrificing partner's capital account debit to gaining. First, let us find out is there an favorable or unfavorable balance. We have debit balance of P&L account 50,000, that is unfavorable. Unfavorable, I am writing in negative bracket. Investment fluctuation fund is 40, but 20,000 will be used for writing off the loss. So investment fluctuation fund, favorable balance, credit balance, how much will remain? From 40,000, we will write off loss of investments 20,000. So 20,000 positive balance will remain. Only these two informations are given. So there is unfavorable balance. Minus 50 plus 20, there is unfavorable balance of 30,000. Now, what would be the adjusting entry if there is unfavorable balance? Sacrificing partner's capital account debit to gaining partner's capital. Favorable, then gaining to sacrificing, just like goodwill. But if it is unfavorable, then reverse entry, sacrificing to gaining partners, okay, with sacrifice ratio and gain ratio. In short, whether it is a favorable or unfavorable balance, first we will have to find each and every partner's sacrifice and gain from the old ratio and new ratio. Let us find that first. Samiksha, Arshia and Divya. Okay, Samiksha, Arshia and Divya. What is the old ratio? 5:3:2. 5 plus 3, 8 plus 2, 10. 5 by 10, 3 by 10, 2 by 10. What is the new ratio? 2:5:3. That is again 2 by 10, 2 plus 5 plus 3, 10, 5 by 10, 3 by 10. Now, how do you find the sacrifice or gain? Let us do old ratio minus new ratio, sacrifice ratio formula. Negative will indicate gain. Okay, in sacrifice. If we do 5 by 10 minus 2 by 10, since the denominator is same, 5 minus 2, 3 by 10 is positive, means it is sacrifice. Then 3 by 10 minus 5 by 10, 3 minus 5 minus 2 by 10, negative means it is gain. Okay, and then 2 by 10 minus 3 by 10, again 2 minus 3 minus 1 by 10, negative means it is gain. So what are we supposed to do over here? Sacrificing partners we have to debit. Only one partner is sacrificing, that is Samiksha. So Samiksha's capital account debit. Who are the two partners gaining? We have to credit Arshia and Diya. You all can see in all entries, do we have this? No. Only here we have Samiksha's capital account debit to Arshia to Divya. Here itself we can conclude what is the correct option? Option A. Okay, this is the correct option. Let's verify the amounts also. 30,000. What will be 30,000's 3 by 10? 9,000. 30,000 into 3 by 10, you all can see here it comes to 9,000. Same way, what is the gain over here? 2 by 10 and 1 by 10. So if you do 30,000 into 2 by 10, you'll get 6,000. 30,000 into 1 by 10, you'll get 3,000. So option A is the correct answer. But even without doing that, once you just identify the sacrifice and gain, only in one entry we find Samiksha is debited and Arshia and Divya are credited. Had it been in more than one entry, same journal entry but amounts different, then only in your exams you waste time of doing the further calculations. Otherwise, directly from gaining and sacrifice, we can identify option A is the correct answer. Okay. Now, 48th question. Sohan and Mohan are partners sharing profits and losses in the ratio of 2:3 with the capitals of rupees 5 lakhs. Sohan's capital is 5 lakhs and Mohan's capital is 6 lakhs respectively. On 1st January 2022, Sohan and Mohan granted means gave. Sohan has given loan of 20,000 to the firm and Mohan has given loan of 10,000 respectively. Now, if partner has given the loan and no rate of interest is given, then as per the provisions of Partnership Act, we have to provide 6% interest on the loan given by partner to the firm. Determine the amount of loss to be borne by each partner. Each partner means this ratio will distribute and will get Sohan and Mohan's loss for the year ended 31st March 2022. It's quite simple. Okay. Just a minute. Sohan and Mohan, capitals 2 lakhs and 6 lakhs, 5 lakhs and 6 lakhs, loans of 20,000 and 10,000. Determine the loss. If the loss, okay, here it's given. If the loss before interest for the year amounted to 2,500, already there is a loss. In P&L account, already before providing this interest, there is a loss. What is the loss before interest? $2,500. Further, if we give them interest on loan, loss will increase, so I am adding it. As the loss will increase, I am adding it. Okay. Both of them have given loan on 1st January. So directly I can add 20 plus 10, total loan of 30,000, 6% interest, and January, February, March, 3 months interest we have to give. So 20 plus 10, both the partners loan 30,000, 6% interest, and January, February, March, 3 months we have to give. Okay. So 3 into 4, 4 into 1.5. 300 into 1.5, 450. Now I'm adding it because it's a loss. So loss will become 2950. Had it been profit, then interest on loan we would subtract because the profit will decrease. But because there is a loss, interest is added as the loss will increase because of interest. Now 2950, if you distribute between the partners in what ratio? 2:3. What amount will you get? Okay, who are the partners? Sohan and Mohan. Sohan and Mohan, 2:3. 2 by 5, 3 by 5. First, 5 5s are 25, 4 5, 5 9s are 45, 0. Now 590 multiplied by 2, 1180. And 590 multiplied by 3. So 1800 minus 30, 1770. 1180 and 1770. Means what will be your correct option? 1180, 1770. The correct option would be option D. Okay. Share of loss of Sohan 1180 and share of loss of Mohan is 1770. Two more questions to go for today. Okay, then as such the time will be up, so remaining will take in the further session. Vihan and Man are partners sharing profits and losses in the ratio of 3:2, old ratio. Okay, profit sharing ratio simply we can say. The firm maintains fluctuating capital method. And the balance of the same as on 31st March is 4 lakhs and 4,65,000. Vihan is 4 lakhs. Man is 4,65,000. 31st March means it is the closing balance. Okay, 31st March means it is the closing balance. Drawings during the year were 65,000 each. Means Vihan's drawing is also 65,000 and Man's drawing is also 65,000. As per the partnership deed, interest on capital at 10% on opening capital has been already allowed. You are given with closing balance of capital, okay? And opening capital 10% interest is already allowed in that. Calculate the opening capital of Vihan given that divisible profits during the year was 2,25,000. So what will we do over here? We'll make a rough partners capital account to find the opening balance. Okay. Debit side things will get added. Credit side things will get subtracted. So we make a rough partners capital account. But over here you all can see what are you asked in the question? Opening capital of only Vihan. So let us do it for only Vihan. We are making partners capital account but only for Vihan. So what all information is given to you as per that? What is Vihan's closing balance of capital? 4 lakhs. So that will come on the debit side. Okay, Vihan's closing balance of capital will come on the debit side. Okay, it is 4 lakhs. Then drawings during the year 65,000 each. So drawing will also come on the debit side. Partners capital account drawings will also come on the debit side. 65,000. Then interest on capital 10% we don't know because opening capital itself is missing. However, interest on capital will come on the credit side. Opening capital will come on the credit side, which is already missing. Interest on capital will come on the credit side, which is again missing because opening capital is missing. On that we have to count 10%. So by default that is also missing. Then the divisible profits are 2,25,000. What will be Vihan's share? 3 by 5. So Vihan's share of profit will come on the credit side. How much will be Vihan's share in profit? 2,25,000 into 3 by 5. 2,25,000 into 3 by 5. So 5 into 4, 20. 2 5 5 5 are 25. 45,000 into 3, 1,35,000. Okay. Now 4 lakh plus 65, 4,65,000. Okay, no other information is given. From 4,65,000, if I subtract 1,35,000, what will remain? 4,65,000 minus 1,35,000, 3,30,000. What is this 3,30,000? Capital plus interest on capital. These two things are remaining on the credit side. 4,65,000 minus profit 135. So credit side opening capital plus interest on capital is 3,30,000. Now, suppose opening capital is 100. On that we provide 10% interest, so it comes to 110, including the interest. Now against 110, the capital is 100. So if opening plus interest is 3,30,000, it is comparable with 110. What would be the opening capital? 3,30,000. Are you asked opening capital or interest? Opening capital is asked. If interest is asked, then you would have done against 110 interest is 10. So against 3,30,000, how much? 3,30,000 into 10 upon 110. Since opening capital is asked, against 110 opening is 100. So against total 3,30,000, how much would be opening? 3,30,000 into 100 upon 110. 11 3s are 33. So 3 lakhs. And you can cross check. 3 lakhs opening capital, 10% interest of that 30,000. Does it make 3 lakh plus 30, 3 lakh 30 or not? So what would be your opening capital? 3 lakhs. Okay. Option B would be the correct answer. That is 3 lakhs. And the last question for today. Question number 50. Savitri Limited issued 50,000 8% debentures of rupees 100 each at certain rate of premium. Rate of premium is what is missing and asked probably in the question. To be redeemed at 10% premium. Redeemed at 10% premium. At the time of writing of the loss on issue of debentures, statement of P&L was debited with 2 lakh. Then at what rate of premium these debentures were issued? Now, all of you can see over here, 50,000 debentures, 100 is the face value. So 10% premium will be 10 rupees only. Now, 50,000 debentures into 10 rupees. What is the premium on redemption of debentures equal to 5 lakhs? Okay, what is the premium on redemption of debentures equal to 5 lakhs? And we have used the statement of P&L of 2 lakhs. To write it off, P&L used is 2 lakhs. Means can I say security premium would have been used for remaining 3 lakhs? Now in this question we assume, see, you can write off the premium on redemption of debentures only with two sources. First priority security premium, second P&L. So if premium on redemption is 5 lakhs and 2 lakh was used, remaining balancing figure from P&L, means first priority, that 3 lakhs we would have written off from security premium. Now we assume that the company does not have any existing security premium. So this entire 3 lakhs is the premium which the company has collected from these debentures. And that premium itself is used in writing of the premium on redemption. So if 3 lakhs of premium is collected, issuing 50,000 debentures, per debenture premium would have been 6 rupees, 3 lakhs divided by 50. Since face value is 100, it would be 6%. 6 divided by 100 into 100. Rupees also 6%, also 6. So option C would be your correct answer. Okay, here we assume that company does not have any existing balance of security premium. Suppose it was given that company already had security premium of 1 lakh, then out of 3 lakh, existing 1 lakh means what is the new premium we have collected to write off 2 lakhs? Then 2 lakhs divided by 50,000, your answer would have been 4. If it was given that existing premium is already there. Here not mentioned means there is no existing premium. So entire 3 lakh is the new premium which we have collected. Okay. So we have covered all the MCQs of volume 1 and 2 starting in your study material from question 41 onwards. Now remaining we'll cover in the further sessions, and then part B, volume 3 is also to be covered up, but they are quite simple. Initial volume 1 and 2 are a bit numerical and critical ones. Okay. So remaining MCQs we'll see in the next session. Bye for that time. Bye everyone. Take care.